Hello, everyone. Welcome back to the channel, Matt with Green Bar Trading, and welcome back to another weekly watch list video. We have a lot of very interesting things to go over in this video, some really interesting charts I've noticed, also a new scan that I have developed using Thinkorswim that, may help us find these beaten down value stocks. So that'll all be in the video. Before I get started, please hit the thumbs up for me. It definitely helps the channel. So thanks guys for tuning in here. And what we're going to show you is, to start, this is the earnings for this coming week. So, keep in mind, if you are trading any of these, just know that and when their earnings are. And then our economic calendar for the week, knowing, if there's any, big economic events or data or Fed speakers going, you're going to want to know that before you trade. So we have retail sales here on Tuesday. That's going to be a big one, but nothing like some of those weeks that we've seen with FOMC and the Fed and jobs numbers, CPI, PPI. So we don't have that. So maybe we can finally have a week of relative normalcy. We haven't seen that in a while. And by the way, if any of you are struggling trading a market like we have seen, you're not alone. A lot of people are struggling right now. So here we go. Getting into the charts. This is the SPY. I like to look at this one on a big picture to see where we can possibly go. So what I've noticed is these are technical bounces that we're seeing off of 15% correction on the S&P 500. We saw the bounces, and now we bounced at about, I think this was about 19%. So about 19.5%, we have that technical bounce that we saw on Thursday. That's close enough to the 20% correction zone that, those algorithms, some people start pumping money back into those stocks that have just gotten absolutely smacked down. Now, is this a bear market rally, or is this a real bottom? We saw the 20% just about. Is this the bottom, and where could we be going? Obviously, nobody can tell you that with any certainty, but what we can look at is where we may see that next area of resistance, which should happen pretty quickly, because the move that we made here from 385 to 405, just about, that's almost a 20-point move on the SPY in 2 days. So that's a very big bounce. Now, when we hit the 15% area and had this technical bounce right here, well, right here we bounced and it was about 6%. So we got about a 6% bounce off of that 15% zone. So hitting the 20%, where would that lead us if we were going to go back to 6%? Right into this red box. Okay. So, coming into next week, watch how price action treats this area, because we're coming into resistance. A lot of charts are going to show you that we're coming into resistance, and I'm going to go over those as well. But this is the SPY. So we broke down, we had a technical bounce, a little bit of a relief rally, and now that next area here is going to be in this red box. Okay, the last time we bounced, tried to bounce up and got rejected at the 20 EMA. That's going to be coming into play as well. So these are areas to watch. If we can somehow break through that, then that would be a more, sustained rally. So right now, this is where I have a possible area to see a bit of a rejection. All right, so that's on the SPY. Going over to the Qs, where I see a possible area is this red box here. So this is previous support, and then we broke down out of it, bottom, and now going back, could coincide with this trend line. Because remember, we don't just keep going down forever. There's going to be bounces. So the bounce here has the possibility of coming up to the 20 EMA and this descending resistance trend line. So maybe around 310, 315, that's where we would start to see some, potential resistance on the NASDAQ stocks. But like I said, anything is possible. Maybe we turn around immediately and, start going back down. So the market has been tough. If you're trading it, take your profits pretty quickly because it could turn the other way very fast. So this was a nice bounce. That's on the Qs. On the Dow, right here, we bounced off of that 15% correction zone. These are technical bounces. So we got the bounce up. Next area of resistance is going to be where we broke down out of. So like you can see here, we're coming into some resistance, within all the markets. So now if we want to look at individual stocks and be a stock picker, because, in this market, it's definitely been very tough, to trade this and to have any confidence that this is the bottom, because nobody really knows where that bottom will be. We do know the market is obviously in a correction, but corrections are normal. So, and they're good. They brought a lot of PEs, which is price to earnings, down. And that's, going to lead into my next point here, and a new scan that I developed. I named it value stocks. Now, why did I name it value stocks? Because I'm scanning for the lowest PEs. Those are the stocks right now, companies that actually make money and are selling right now at a good value. That is what I want to be looking at. And if I'm looking at these ticker symbols, I'm noticing there's a lot of banks in here, a lot of really beaten down banks, and also mRNA. That's something that I noticed, and I had no idea that the PE was at a 4. So if we look at this on Yahoo Finance, because I had to look this up, type in mRNA, and click on statistics, and we will see where this came from, and to show you guys how overvalued things were. So trailing PE, that's going to be for the last 12 months. Look where we've come from a PE of 191, stair stepping down. Now Yahoo has it at a 3.63. Look at the profit margin on this company, insane. So total cash, crazy. Now, we know why Moderna has been successful. Obviously, it's because of the coronavirus shots. But is the coronavirus going anywhere? Probably not. So they're going to be a company that's going to be making, vaccines. Maybe they'll make something with the flu. and coronavirus, who knows? Either way, the stock has come back down. And if we look at this on our charts, look where we're at right now. From a high of almost 500 all the way down to a low of 119. And this is what I'm talking about. So, you know, when things start to correct, prices that were hugely inflated are now coming back down to reality. So what I see here is the potential for a double bottom. What I'm going to be watching for is the break of this trend line. It broke out of it, rejected at the 20, and then, you know, closed just at that trend line. So I want to see if maybe we start to see these moves in biotech and healthcare. You know, that stocks that have really gotten beaten down a lot. And this one is, you know, it was up 6% on Friday. So a lot of these stocks, if you do see a relief rally, they're going to catch a really nice bid because they've been so beaten down. So maybe we get that here. So keep that in mind. You are having some overhead resistance here at 153, where the 50 moving average is, if you do break the 20 EMA. So keep this one on watch. This is one that I'm definitely going to be having on watch and found through this new scanner. And you can see here, I mean, these are really Citibank you have here. You have Synchrony Financial, really, you know, solid companies that have gotten just crushed. And these make money. So, you know, keep this in mind. This is a really nice scanner. You know, I'll show you have Ford here. You have Macy's, a lot of stocks that are selling, Capital One Financial, a lot of stocks that have really just gotten destroyed. This one, wow, I didn't even realize how much this one pulled back. So this could also be something to keep an eye on. So, you know, nice to have these scans here. And, you know, that's just something that I added in this type of market. I thought it would be, you know, helpful to you guys. So getting into our watch list. And I want to show you guys first the stocks that are going to be coming into that resistance. And then we'll go into the stocks that I think have the potential this week to really break out. But let's first look at these stocks that I would look to, you know, depending on the market, that I would look to be getting short on coming into that resistance. Microsoft. All right. What does this look like to you? This looks like the rest of the market. So we had a very clear area here where there was a lot of demand. Every time it came down into this area, we would see price shoot back up. Well, we broke down out of that. So now the next area to get short would be around this 20 EMA, around this, you know, 270 to 280 area, if price can push up here for that next leg down. And of course, the rest of the market depends on these types of setups that we're seeing in these heavy weighted stocks. So keep this in mind. If this comes back up here, it could be a short. So that's Microsoft. AMD is the same thing. Something that broke down out of this 100, retested it, and it's kind of just been in this area here. If it comes back up to 100, you have 101 at your 50 moving average. Again, possible short up here. So keep that in mind. Like I said, though, the rest of the market is really going to determine this, these setups. So keep this in mind. But a lot of these stocks are coming into that former breakdown, and now they're coming back to it. So there's definitely a possibility for more rejection. Home Depot is the same way. We finally broke down out of 300, and these were stocks that were on our watch list last week for the break. We got the break, got good trades out of it, and now we're right back to that area. So what was support is obviously now going to be resistance. Home Depot also has earnings coming up. So, keep all of that in mind. But these are stocks, and we could look at Apple too, although this one, I was doing the technicals on it, and I didn't really have a strong enough opinion going short because of this bounce here off 138.80, which was support here. So, I don't know really how much, I just don't have the confidence in this one to tell you guys either way which way this is going to go. So that's why I don't really have this one on any specific trade plan. So now going to our longs, Target has earnings, and when it has earnings, we have seen huge gap ups. Now, that being said, they're not expected to grow the same way they were growing before, obviously. So that might, depending on, how their earnings come out, that could be an issue. But, their PE has come down a tremendous amount. So, a lot of people, a lot of institutional investors like this stock, and they like it down here. So we'll see what happens with earnings, but I do like Target a lot. Another one that can really blow up and just moon off of earnings is Zim. Okay, they do shipping, cargo shipping all over the place. This company, you could see their earnings, $14 a share, $12 a share, up from $7 and $5. So there's obviously a huge demand for shipping containers across the oceans, and they're getting their price. So I think that their profit is going to be insane. Now we're over the 200, which is good. You just have the 50. See how it rejects off of this? What used to be support with the 50 moving average, once it breaks down, then that 50 comes into play again. So if you get a break of this, there's really some good room to run on ZIM. See how the earnings come out. Disney's another one that we called last week that I thought off of earnings can really be a very nice play. And that's exactly what happened. So I do like this one long. I would add, I think a lot of people would be adding to shares, especially when it was trading, up here. And if you look at the weekly, it was lower than pre-coronavirus. Okay, so, this has the possibility, that's a nice weekly candle right there on high volume. This has the possibility of turning things around. That's why I like Disney long. And then this one, I'm going to look at this on the daily. Trading in a range right here. Looks like we're coming back to that 125 area that has been support. Now, in high inflation times, healthcare, energy, these are places you want to be. And we saw that rocket to 143. The market tanked with it. This came back down, but we're starting to see some support here. So that's why I'm long healthcare stocks. And if we look at Pfizer, this has been on a trend line here. If we look at the weekly, going all the way back almost 2 years, just been on this really nice trend line. Or is that 1 year? Okay, yeah, we'll call it 1 year. Nice trend line, and you know, bouncing along it right here and right along that 50 on the weekly. So, you know, these stocks are definitely still trending up, and this is a healthcare stock. Healthcare, you know, is really going to be somewhere where people want to just put money in this type of environment. So that's why those are on my watch lists for my longs. So that's it, guys. I have the new scanner. We'll keep this one on watch. A lot of these stocks are coming into really nice, you know, setups potentially to start nibbling on, because I think that's what you have to do right now. Instead of putting all your eggs in one basket and saying, okay, the bottom is in, I'm pushing all my money back in. That's really, you know, a little bit dangerous thinking. Just start, you know, if you're building a long-term portfolio, these stocks have come back a lot. Their PEs have come back a lot. They're sitting at decent deals now. You know, maybe it's not a bad idea to start buying some shares. And if you are in these a little long, maybe averaging down a little bit. So yeah, we saw some good moves Thursday off the bottom, Friday continuation. Now what we're going to be looking for is a follow through day. I want to see that happen Monday or Tuesday. A really nice big percent gain in the markets to show us that institutional investors have started to put all that money that's on the sidelines back into equities. So keep that on the top of your mind. Hit the thumbs up for the video, and I will see you back on the next one. Take care, guys.